We have extreme fear that has just been injected into the market. And some of you that are unfamiliar with this may be panicking yet again. Is this another April? Is this another March? Are these tariffs going to just send us into oblivion? Right? We're in a government shutdown. Inflation is high. Yeah, we have rate cuts. Yeah, that was good for a second, but now we are pulling back. I want to get you excited about this time because I'm going to show you here in just a second how this happened last time, and it sets people up again for another bullish run. Now, I'll make a disclaimer here that no one can time the bottom. So there are signals that we look for on the charts that allows us to see when that reversal is coming in. Okay. And it's not on everything. There are some stocks that are still weak and they could continue lower. However, you want to go ahead and, not financial advice, dollar cost average in the shares that you have been looking to pick up a dip on. So a lot of these run ups, they're pulling back, right? So now's your time, if you didn't get on the first run, to start DCAing down. That means buying shares on that recurring buy in your Robinhood, in your Thinkorswim, Charles Schwab, JP Morgan, whatever brokers that you use, and you can dollar cost average shares. For my traders, I'm going to give you an idea of when that reversal may happen. Since we didn't get the drop in September, now is the time that October drop is coming, so we can have that bullish kind of Santa rally into November and then into the final push of the year. All right, that was a mouthful, but I want to get you prepared. Welcome to the channel. My name is Dr. B. You can look more about me down below in the comments, in the description, and also on my other social platforms. Check out the rest of the videos on the channel, and let's get right into it. All right, so let's check out the charts first of all and see that there was some interesting sentiment today on the market. If we go into the SPY, and I always, anytime, because I know I have newbies coming on, okay, I'm going to erase everything on here and start teaching and drawing out from a basic perspective. Okay, get all the volume profiles, every line off. Okay, so if I go out here into the daily chart, I've been talking about, I've been watching my videos and keeping up to date. Make sure you subscribe, turn on those notifications so you can watch the videos. All right, when they come out, because previously I talked about this happening, is that this candle right here is what we call an engulfing candle on Friday, when we had those tariffs on China and the trade war started back up more intensely. We then had inside bar candles that followed for the Monday, Tuesday session. And now we're coming into Wednesday, Thursday, and we still have not gotten outside of this range of that engulfing candle. That is indecision. That is a little bit of fear injected in the market still to this day. However, one thing I want you to notice is that we have somewhat of a pattern here that could be forming, which is at what we call a head and shoulders. Okay. Now, it has to take out what we call the neckline, which is this low, all right, to fully form, because this can be invalidated. And I'll tell you, for my beginners, specific levels that you need to watch for. Turn on your notifications if you're on the charts, or if you just check your phone and see where things are. If you see it below these levels, we're coming down. If you see it holding above or break above these levels, then we can go back up, all right? So we have this kind of head and shoulders pattern that is what we call a bearish pattern, all right? There's a left shoulder right there, comes down, goes up higher, comes back down to the neckline, goes up, and cannot get back up to the highs, all right? So we want to look out for this. It's something that I notified my community inside of Leverage to look out for, but we still have not broken below this neckline. That essentially means that we can be invalidated on this head and shoulders, and we could have a higher low set right here and take off, right? So that is still very much possible that this is still holding in a bullish consolidation, even though it may seem very bearish, fearful, so on and so forth. It's got to break down below, okay? 660 was a little bit concerning today that it came back down to there, but we've got to get below this 655 and ultimately below that 652, take out that low, and you will start to see a candle that looks like this, okay? If we do not see more bearish pressure, then the bears, the sellers, the people that are trying to push the market lower are going to get trapped, and we're going to squeeze back higher. So you have to have an open sentiment. We've been trading absolutely amazing with this volatility because we got a direction. Any pop, I'm shorting. Any pop, I'm shorting. Some of you may be scalping the upside, and Many of you are like, forget the stock market, Brian. What about gold? Right? That has been absolutely crazy. And that's also a concern that more money has been pushed into gold as a hedge against the market potentially falling. All right. So let's go into the hourly here. And I want to show you something that I was showing yesterday on the video, that we kind of have this situation panning out. Okay. So if you were a buyer, which is okay to dollar cost average, but if you're trading this and you hold a buy position or you hold a call position in options and you're thinking that it's just going to break out, hey, we're in a bull market, right? We have changed tone, changed sentiment after this Friday breakdown. So for bulls to have stepped back in heavily, we would have had to break above this previous high day, which was yesterday at 670 with strength. Okay. Hold that 671 and then we can go like that. Okay. That would have been the sentiment that the bulls needed today. Otherwise, we have this underlying resistance that's sitting right there. Now, again, Brian, what do you mean resistance? Like it's going up. Yeah. But again, the technicals show us that former support. So this used to be green, right? That used to be green. It used to be sitting and sitting and sitting and sitting and sitting and going higher, right? When we break that, that now becomes a resistance, right? Cannot get back above, down. Can't get above, down, right? So today was a little concerning because we closed. Did we close underneath? So we closed kind of at an equal high right there. We closed at 660. Yesterday's close was at 6, a little bit higher there. So we did have a lower close today, and the close was right here. So again, bulls are trying to hold up this 660 level as much as possible. You can see right there, bounce, right there, bounce, right there, bounce. What you would have wanted to see towards the end of the day is a stronger push off of that 660. Okay. Otherwise, this trend right now is a little bit invalidated. We have broke trend. Can this be a big bear flag? And it comes back to retest the lows. We sit here, we pop maybe one more time potentially, and then we either gap down or we're back down there. Okay. That is very much possible. Okay. Now, you saw the thumbnail, and one thing I wanted to share with you was this fear and greed index. Okay. This fear and greed index shows us that when we're in extreme fear, and I hate when it does this, so I have to get off of here. It always, anytime I go on CNN, it just starts to mess with the video. So you saw that we're in extreme fear. Okay. Anytime we're in extreme fear, it may seem like, oh man, this can go lower, this go lower, this go lower. Yeah, it can. But anytime we're in extreme fear, that is a time when, as I said in the beginning of the video, you want to go shopping, right? You want to not time the bottom, but you want to begin getting interested in the rebound that will come potentially in November, maybe next week when the rate cuts, right? Our next FOMC meeting when he cuts the other rates, which are, I think, about 98% that we're going to have another rate cut. So this could just be the fall before the next rate cut and we spur higher, right? So just get interested. If you don't know how to trade the downside, or you don't know, you're panic selling and you're taking some off the top, do what you please. But again, understand that anytime this happened, we got an extreme fear during April and March. It lasted a little bit longer, about a month and a half, right? We stayed in extreme fear. It was consolidation, people picking up dips, people accumulating. So when that positive news came out, right, that, hey, everything's fine, trade war is good, Trump says, hey, we worked it out, there's a deal done, we're going to have a rate cut on top of that, we spur higher. All right. So for any of my more advanced investors or anyone that has speculative kind of concerns about the market, I definitely understand, right? That, Brian, like, yeah, that could happen, but I think we have lower. Personally, I do too, right? Again, I've been talking more so about these bigger weekly pullback levels that we should test. And in my opinion, we would love to test. So you see how it's sitting up here in this indecision weekly candle right here. So what if next week is that week that, gap down, right? We have some type of situation over the weekend. Either we spur higher or we have a situation and we just gap down and we go over the weekend and it just all hell breaks loose, right? And we fall into this 638 to 640 level. That is the level that I would prefer, right? To get into that extreme fear, we drop down into here like this, give us one more candle down into there, and then we can see what it looks like to hold this weekly higher low and pop back to the highs and maybe start making, I'm saying maybe, but should start making a new all-time high to finish off the year strong. Okay, especially with more rate cuts predicted. So that's kind of the look for my visual people that I would be ultimately looking for to finish off the year. Now, could this be a top, kind of like what we had towards the end of 2024, is that we spur higher one more time and then things get a little bit shaky going into 2026. And can we get that bigger weekly pullback back to this 600 level, right? That would be ideal. All right. That would be a beautiful weekly pullback right there. And that would kind of be in that correctional territory. If I pull this back, correction, remember, is around 10%. So if it gives us one spur higher, try to get to 670, what is this? 700, right? On SPY. If it tries to spur higher into 700, and then we, off that big psych level 700, we pull back, that would be kind of what I would be looking for ultimately. So I have a somewhat of a bias, but every day I keep my head on a swivel. I trade the markets. I react. I don't predict. So you can have a bias and a sentiment, but you don't try to time it, predict it, whatever, right? So you know when to strike on your particular play or whatever you're looking at. All right. So I can adjust this a little bit here on a 4-hour, where you can see there that we're still technically on a 4-hour holding a higher low, right? We have not broken this neckline, and we could continue to drive up, pull down, drive up, pull down. What if it just sits here and some positive news happens, right? That's where the head and shoulders would be invalidated. Okay. So just want to show you that from a technical perspective, and also from a fundamental, just look at the fear and greed index. All right. Now, Brian, that's SPY, right? What about some individual names that maybe you should take a look at? Since we're in earnings season, some of these earnings reports could pop us higher, right? We have earnings that'll be picking up pretty heavily next week. If you look at this earnings calendar right here, right? We had TSM report well, we had finance report well thus far. And then we've got American Express tomorrow. And here is the calendar for next week. So we got Tesla, Netflix, Coke, IBM, Intel, right? So these are the companies, some of them that have been really, really strong, like INTC, Intel, I talked about. IBM's been very strong. I know Tesla's been strong, but Tesla's always a crapshoot going into earnings, right? Their earnings have been absolutely awful, but it's going higher. So we'll see whatever is going on with that. And then you come into this third week here, that's where the money week is. Okay. So preserve your mental capital, preserve your actual capital, and wait to strike, because this is a good thing, everybody. This is a good thing that we're pulling back going into buying season, right? It's happened every single year. Okay. It happened every single year. If I go back to the October, and we can't time it, if I go back to the week of October into 2024, we'll see a couple of red weeks right here. Okay. Into the end of October. Look at that. See that pullback into the end of October? What happened? Now, this was a election year, but look at that candle leading into November. Look at November. Look at December, right? Look at November right there. That November month went from, on the SPY, it went from 563, about 7%, 563 to roughly $600. So you're talking about a 40-point move. Okay. So prepare for that. If you are not familiar with this season, not familiar what's going on, this is normal. All right. There has been historical context that November has been the most bullish month of the year, ending off the season. Right. So make sure that you're prepared. Crypto, I know it's pulling back. Hood is on high alert, because that's going to move with crypto. So if you're a person that is highly invested in Robinhood, 130 is very key. So if we tick down a little bit further, that could be an extreme pullback, right? Reclaim and go. All right. So I'm looking at this hood very closely here at this 130 level. that this could be somewhat of a buy zone. If I look on an hourly time frame, it's also in oversold territory. And also on the MACD, not as confluence there, but MACD on the 4 hour here, that starts curling, right? This is just consolidation down here, waiting for some good news to pop back very quickly back to 150 most likely. All right. And then trying to take out the high. So it would look something like this and go. All right. So Hood is on high alert, I think, for a big pop with crypto into November. I know folks are concerned about NVIDIA, right? It is what I noticed about the price action. I traded NVIDIA down here today on this short is if we reclaim 184, turn your alerts on. If we get back above 184, right, it is going to absolutely squeeze. Okay. It's going to look like AMD. All right. AMD, remember when it was sitting down here, there was a gap on AMD. If it gets like that, first pullback, it's going to be very quick. And we're going back most likely to 200. Okay. So watch the reclaim of 184 on NVIDIA. It's been having some good news, but the sentiment is the failure back underneath this previous high here. So we got to get back above that 184 level. Okay. So for my NVIDIA bulls, there's like, man, when's this thing going to go? Be patient. Okay. Make sure you have time on your contract or be patient. All right. It's holding underneath the daily 20, which is sitting right at 183.50. Okay. Some other names here. Let's see. Amazon is another one that's pulling back right here into this 210. And there's some gaps down below. But again, we're in extreme fear. It's got to have some bullish action coming off of it. We just don't see it just yet. You can see on a weekly lower highs, lower highs, lower highs. It is coming into some levels here at about 210. So watch Amazon. Amazon will either need a strong bounce off of a level or a reclaim. All right. Other than that, I want to see almost a flush on Amazon, maybe down into this 205, 208 area. Okay. All right. Let's see. Coin for my coin folks. Crypto pulling back here. I know many people wanted coin to break out into new all-time highs. This is a little concerning here, but it could be just a retest. Could just be a retest of these lows. I would just take a look at really 300. Really 300. All right. A couple others. HIMS. Big watch on HIMS on this pullback because it broke out, had really positive news, and this could be this higher low trend. Right. Would love to see HIMS, hold up 60, but it could be just a pullback, reclaim back above, and then we're going higher. So HIMS, right, very volatile, but $10 push up and then $10 pull back. All right. So watch HIMS at that 55 to 50 level, ultimately trying to reach this 70, 75, and ultimately 80. So HIMS strong, but because the market's weak, it's pulling back. All right. That's why we do not chase. And I am also looking at the overall market. If we break out and get back above some of these levels on the SPY and QQQ, I mean, we're absolutely going to squeeze for the strong stocks. Okay. QQQ levels 598 and then getting back above that psych level of 600. Again, I'm watching the daily 20 moving average right here. It's still holding right at the daily 20. We did close a little bit under it, but you see that light blue line right there, right? It's hovering around it. So if we get back above, hold above and start riding it again, that's where the bulls will step up a little bit more. You can see these bottom wicks are stepping in, right? Really not going any lower and taking out new lows. So this is technically still bullish. Okay. Technically still bullish. I know it's concerning, but again, this is why we do not chase highs. I do not personally like breakouts or pushes into resistance. People are getting trapped. All right. It is. And I understand if you're a beginner and you're like, man, what is going on? It's like, are we not, when's the day going to be we break out? You need to get on the charts. Okay. I don't know how many times I got to repeat myself for those that just keep coming on here trying to figure out you're guessing. Watch my last video. Stop guessing, right? Because we absolutely killed it today in the community. I said yesterday, any pops, I'm shorting until we break above new all-time highs. And we took the trade today, right? I told my community to short Wells Fargo because the banks were getting weak and overextended with the market, right? If you took upside, that's cool, right? And here's what we took: NVIDIA 180 put for 50%, Google 255 put entry, right? Who would think, in my opinion, to short Google? Now, if you took the breakout on Google, great, but I do not chase, right? I do not chase. So that means that if you took this right here, great, opening drive push. Brian, I could Google calls. That's perfect. I had that on my watch list. Hold above 251, but it happened too quickly. Saw the market was pushing up into resistance. Top tick Google, right at the top here at 256, rode it down to around 50, 60%. Okay, it went right to my target. We need to retest 250, 251. And if we get underneath there, I mean, that is a look above, fail, all-time highs. All right. You can see the top wick. That is where the traps are set. Right. Breaking new all-time highs, at least on one-time touch, is usually a trap. Just tell you that right now. One try, two tries, trap, double top. It needs, in my opinion, about 3 tries for a breakthrough. That means they'll pull back here, maybe hold a 246, and then try to go if we get that bullish momentum. All right. So I do not like taking breakouts into new all-time highs when it is typically the second try or we're in resistance of SPY and QQQ. Okay. It's going to be a trap most of the time. All right. That is about it. That is all I got. So in summary, keep your head on a swivel. Stay out if you feel confused. If you're trading alone and you're not in a community, not in a group of friends, you're not paying for a community, whatever, we would love to have you inside Leverage University if you're enjoying this content. If you're going to stay on the sidelines in YouTube, please make sure that you are trading safely, lowering your position size, watching these videos, testing, learning, and trying to be as successful as possible. In my experience, folks, you know what it is right now. We are bullish until proven otherwise, but right now it's a little bit indecisive and we got volatility going back and forth. Gold is absolutely ripping. I think I was going to show that, right? That is another sign of strain on the market, right? Is that people are putting their money into gold, ripping gold higher, GLD going higher into 400, into that cycle level, massive move on gold, right? It is getting overextended. So, you know, when there's a pullback on gold, probably rotate back in the dip on the market and gold will pull back. Market will typically rotate back to the highs. All right. Until next time, thank y'all so much for tuning in, listening to me. I love you. I appreciate you. Make sure you hit that like, subscribe, notification bell, stay ahead on a swivel, and look out for this bullish move going into November once we find the bottom in these next couple of weeks. All right. Talk to y'all soon. Bye.